Good morning, everyone. We're going to go ahead and get everybody situated and logged in. You will be able to use the questions box on the right-hand side. We do have a copy of the presentation that goes along with today's information in front of you if you are tuned in on the app or on your desktop. If not, this session is being recorded and will be archived later on our website. If you missed the other two series as part of this program, we had one on down payment assistance as well as things that are important in that homebuyer education process. You can always go back and watch that. Louisiana Realtors is really excited to be able to offer this educational resource so that more realtors can be exposed to and understand some of the programs that are offered by the Louisiana Housing Corporation and what programs can help get qualified buyers into a home that maybe they didn't think that they would be able to qualify for. And so we have Crystal as well as Miss Terry that will present some information for us on the program, and they are a wealth of information as well as a great resource to be able to ask questions for or ask questions to, as well as if you have any buyer clients that you're working with right now that you think would be a good fit for any of these programs, it's certainly something worth looking into so you can assist them in that process. And with that being said, Crystal, I'll turn it over to you and I can help advance the slides on this back end as needed.
Okay, perfect. Thank you so much, Amy, and thank you guys for having us today. We are really, really excited about presenting this particular product on today. We did have, like Ms. Amy said, a presentation about just an overview of down payment assistance, and we just really felt that the Resilience Soft Second is an animal all by itself. It is a very attractive product. And I say attractive because whenever people hear $55,000 in down payment assistance, of course, that's going to, kind of pique some interest. But we wanted you guys to know and to be educated on what type clients would fit into this product. So that's kind of why we decided to kind of break these up like that. So, Miss Amy, next slide. All righty. So just an overview. This is CDBG funds. So it comes from disasters. This is some disaster funding that we received, and this funding is tied to the Great Floods of 2016. So today we're going to go over how does it work, the assistance that's provided, the program guidelines, the compliance documents that's a part of it, the compliance file review, the submission process. We may not touch a lot of that. The wire process request, we're going to talk about that. And that is really all we'll probably hit on. I wanted you guys to see everything that the lenders see. However, I'm just going to really, really hit on myself and Ms. Terry will hit on the high points that you guys can kind of use as takeaways. Next slide. Okay, so how does it work? The borrower must qualify for one of LHC's market rate program loans, the Resilience Soft Second Government, or the Resilience Soft Second Conventional. So what does that mean? That means that they have to have at least a 640 middle credit score. They have to income qualify for this one. And they have to be first-time home buyers. And we'll talk a little bit more about that definition of that first-time home buyer rule, which is, typically that 3-year rule. Number 2, the lender will reserve the loan with both LHC and standard, and they have to go in and reserve each funding separately. So not only will they receive down payment assistance, but this one also has closing cost assistance, which goes up to $5,000. Next slide. And what I want you guys to remember is that this product is on an as-needed basis. And when I say as needed, it's let's say that the seller is helping with some of the closing costs. So the client, the buyer, doesn't need the entire $5,000. They may only need $3,000. we will adjust it and say, okay, this buyer only needs $3,000 from the resilient. So it's adjustable. They don't have to take the whole 55. They don't have to take the whole 5. It's only as needed. The lender will submit the compliance package to LHC as usual while they do internal underwriting. The loan is scheduled to close, and the lender will fund the first and second. LHC will provide the closing costs, and after closing and purchase, Standard will reimburse the lender. Next slide. Okay, here's some meat and potatoes. This is the stuff that you guys would really, really like to know. So when you're talking to your buyers and you're having a buyer's consultation, this is some of the information that would be very, very vital to know. So the soft second loan is 20% of the purchase price, up to $55,000 per household for down payment, and up to $5,000 for closing costs, bringing it a total of up to $60,000. Okay, look at that first bullet point. It says the soft second provides, it covers the affordability gap between the sales price and the price that's affordable to the qualifying borrower. So how does that work? Let's say that this borrower is looking at a house for $130,000. The lender said they only really qualify for $100,000. Well, as long as that lender can get their ratios within the DTI ratios that's on this product, then they can purchase a house. They can purchase that house for $130,000, with the $30,000 being the soft second. Okay, there is no interest rate on that soft second, and that's because it's forgiven after 10 years of owner occupancy. So this does have to be their primary residence, and it is forgiven 1/120th per month. And we do checks. We do annual checks, and those annual checks will consist of, we would have to see homestead exemption. We would have to see some type of utility bill in order for them to continue with the soft second going into their forgiveness process, okay? Closing costs is up to $5,000 and it's based upon need. There's no origination or discount fees. The lenders are charged. They charge their primary and customary charges. They don't do anything extra or additional. We do not allow that. There is no mortgage associated with the closing cost assistance. And after the second year anniversary, the closing cost assistance becomes a grant, a true grant. So as long as they stay in the home for 2 years, the closing cost is a grant. Next slide, Ms. Amy. Okay, so here are some meat and potatoes to this one. The loan type. Your lender can use this with any of the loan types. If they say your client has to go FHA, if they have to go VA, RD, Freddie Mac, and Fannie Mae conventional, they can go either one, either way. Okay, they can use this product either way, however it goes. They just have to make sure. The biggest thing is that your client fits in the income bracket. Okay, all of our products are 30-year fixed rate. That income limit is 80% of the area median income. Credit score required is 640. And check that out, guys. The borrowers have to have 3 scores. They have to have 3 scores. Manual underwrites are not allowed. So if you hear manual underwrite, you automatically know, they cannot use LHC's down payment assistance, okay? Another thing, properties allowed. They can be an X or excess protected by levy with the flood insurance, and they can be in Tier 2. That is a new upgrade that we have allowed. They can be in that Tier 2. They cannot be in the AE and the real prone flood areas. That's not allowed with this one, but Tier 2, X, and excess protected by levy are acceptable. Site-built homes. So, yes, we do DSLD, we do DR Horton, we do all of those. We do condos, townhomes, modulars, double wide, manufactured. As long as they are permanently affixed to the property, they can go FHA only. Okay, check out these ratios. I know this is not really for realtors, but I know a lot of you guys like to know what's going on with your clients. So, front end ratio has to be between 30 and 35. Back end cannot go above 48. Required investment. Greater of 1% of the purchase price or $1,500. No gifts or loans are allowed. Okay, so let's talk about that a little bit because I want to show you guys the trick. They do have to have a required investment, but let's look at it. They also have to bring a deposit check to show that they're serious. They have to pay for their inspection and appraisal, and sometimes if they don't go through LHC, they have to pay for Homebuyer Education if they're a true first-time homebuyer. All of those fees, if you can prove that it came out of their bank account, if the lender can source it out of their bank account, not a credit card or anything along those lines, but their bank account, that can reduce that 1% or that $1,500. Okay, so remember that they have to show a deposit check, appraisal, inspection, sometimes homebuyer education. All of these fees that are associated with purchasing this home, if that lender can source it, that deducts that 1% or $1,500. That's big when working with these clients, okay? Because these are working family clients and money can be kind of tight, but they have a strong work history. They have a strong credit history. They're very responsible and they're ready to take that next step to purchase a home. They just need a little assistance. So just remember that when you're talking in your buyer's consultation. Maximum home buyer investment is greater of 10% of the purchase price or $10,000, and maximum reserves greater than 6 months PITI. Next slide, please. A little bit more details. Purchase money only. First-time home buyer. No buy down. No non-occupying co-borrowers on this one. Lenders still only get 2%. The background details, those underwriting platforms, DU or LPA for both, conventional and government. Tax returns are 3 years for everyone over 18. One trick to this one is, even though if your client is going conventional, this is a household product. So we would have to count all income from every person that's 18 or older, okay? Just want you guys to remember that. Those are the assets, the fees. Oh, this is really big too. Duplication of benefits, because the lender and LHC will check this. So it would be a good rule of thumb for you guys to probably check it. If your buyer received Growth Home Funds, if they received Restore Louisiana funds, if they received anything along those lines, they cannot participate in this product. Okay, so it may be a good idea to ask those questions when you're speaking with them. Did you receive Restore Louisiana? Did you receive Road Home Funds in the past? And as long as they say no, then you're good. If they say, well, when Katrina hit, then you may want to kind of question and talk with your lender and see how you guys can find out that information before going down this road. I'm not saying that they cannot use any of LHC's products, just not this one, because of the funding source, because it's CDBG funds and all of that comes out of the same pool of money. Okay, next slide. Eligible parishes. So unlike all of our other products, this product is very specific to certain parishes. And those parishes are the parishes that were affected by the 2016 floods, the ones in March and the ones in August. That does not mean that your buyer has to purchase in those affected floods. It just means that these are the only areas that you can use. I'm sorry, that does mean that you have to purchase in those areas. Sorry guys, they do have to purchase in those affected parishes, okay? The first mortgage rates, they're posted daily. If you would like to see the interest rates, if you are that realtor who likes to know the interest rates and just stay on top of that, please send myself or Miss Terry an email and we can have you guys added to those so you can see what the lenders see, okay? And our information is at the end of this presentation. So soft second assistant loan terms, there is no interest rate on this one. They just have to remain in the home for 10 years. Closing costs, they have to remain in the home for 2 years. Insurance requirements. This is something that kind of stands out. Okay, even if the home is not in a flood zone. Remember I said X and XS protected by levee? That's not considered flood zone here, right? They still have to carry flood insurance. That is just an extra layer of precaution, and we can thank the Great Flood of 2016 for that. So, HQS inspection and environmental inspection, those are two inspections that are checked internally with LHC. That's why we always say it's a good idea to put a 45-day window on closing on these, because those two inspections have to be done internally. And we have persons from the LHC that goes out to these different parishes and does these checks. So just remember that we do have to have those done internally. And so it's a good rule of thumb, 45-day window. Okay. Homebuyer education is required if they are a true first-time home buyer, never purchased a home. Next slide. You can go to the next one. That's for the lender. Okay. Homebuyer education. Homebuyer education. So, if they're a first-time home buyer, then that link right there at the top, the HUD approved link for all of the offices statewide, the education has to be HUD approved. So it is not acceptable in LHC's terms for the home buyer to use anything from like MGIC or Radiant. We can't use those. We have to use something that's HUD approved. And so that link at the top will show you all of the HUD approved statewide agencies. The two online courses that are acceptable is eHome America and Framework. Those two are acceptable. They do have a cost that's associated with both, but they are acceptable. Right now, LHC is offering these first-time homebuyer classes monthly at no charge. That is offered through Miss Sonia Andrews. That is her email address. So she also did the last presentation about homebuyer education. If you have any clients that need to take the class, she is offering those online right now. So they are able to take an online course for free. They are live classes, but they can still get the course and the coursework and the hours done for free online. Okay, so reach out to Miss Sonia and she can walk you through that process. Next slide. Next slide. Next slide. That's all lender stuff, guys. Next slide. Okay, so this is a big one that I want you guys to think about. Let's say that you're working with a client right now. Let's say you have a client right now, and you're like, oh, they're getting down payment assistance through LHC, but they're using the MRB, and I think that they would better fit in this one. Take a look at that period, that wait period that they would have to go through if you called the lender and said, hey, I want you guys to look at the Resilience Soft Second. They have a 45-day lockout period for relocking. So just think about that when you're talking to your buyers and your lenders, that if they really feel that they need to look at the Resilience Soft Second, let's go ahead and look at that one first, and then cancel that one out, because they're very strict on this 45-day lockout period. So just think about that. Next slide. We kind of went over that. Manual underwrites are not allowed. They are not allowed. We underwrite loans based on the loan product and our Soft Second guidelines, which all of our participating lenders have copies of our guidelines. And those guidelines are basically what I told you guys: 640 middle credit score. The client does have to have 3 credit scores. We cannot do 2 on this one. This product is the only product that's like that we have to have 3. All persons have to have 3. We do not do manual underwrites. We also do not underwrite files. We do compliance reviews. So it's different. The lender will be doing an underwrite and we'll be doing a compliance review. And included in our compliance review will be HQS, environmental. We'll do that internal check for restore and road home funds. All of that is a part of our compliance review. The biggest thing, 2 big things that we check for in-house is income. We look at those income brackets, and we take a look at the income brackets, parish that they're purchasing in, and first-time home buyer rule. Next slide, Miss Amy. Okay, so I just repeated myself. 3 areas of review: first-time home buyer rule, income limitations, and max purchase price. Max purchase price is $271,050. They cannot go above that. That is with the $55,000. That's with that 55,000 included in that. So the max is 271,050. Okay. Next slide. Income that's calculated and looked at. All of the income that you guys see on here will be used, okay, to see if they qualify for our product. So, and we look at over the next 12 months. So I know a lot of times you will hear lenders say, oh, they don't, this is child support and it won't be here. The child is 16, so we can't count it. We can't use it. Well, the way LHC looks at it is if the child is 16 and the income will be around for another year or so, we have to count it. We have to use it. So our rule of thumb is not the less than 3 years, it's the next 12 months. So everything that you guys see there will be included. And my computer was giving me some issues this morning. So I'm going to see if I can pull it back up because I had that income pulled up for you guys. And I wanted to tell you what it looked like in the EBR, some of our parishes that surround us. So let me see if I can pull that back up while you guys take a look at that. Okay, I was able to pull it. Okay, so if it downloads, these computers have a mind of their own. Okay, here we go. So in the EBR area, guys, for this particular product, it is based on household size and income, okay? So let's say that you are meeting with a couple and no children, but husband and a wife. The max they can make for the Resilience Soft Second together is 47,050. That's the max they can make. Now, let's say that you're meeting with a family, and this is a family of 5. The max two-parent household and 3 children. The max they can make is 63,550. Okay, so a lot of times this will be for public service, school teachers, essential workers. That's who these products are for. Okay, Ascension is also in this, and Ascension looks a lot like East Baton Rouge. Family of 5 would be 63,550. Orleans is not in this one, but let's see. Cato is in this one. And a family of 3, 2-parent household and a child, 42,950. Okay, and I can send this exhibit over to Amy so you guys can see it and use it as a reference. It lists all of the parishes that you can use this product in, as well as the income. Okay, next slide, Miss Amy. Next slide. Okay, and I think that is it for those for the slides for you guys. We can kind of open up now for questions.
Okay, if anybody has any questions, feel free to use the questions box. I know a lot of times the information that is covered is kind of detailed, and so you will get a copy of this recording as well as the presentation. Our office will be working with LHC to co-brand some of the information that can be helpful to you as you are meeting with certain buyer clients and things like that. And we'll kind of follow up at the end of this series and kind of come up with like a fact sheet or something that goes over all the different programs and things that you can do. Is Orleans Parish included in this Soft Second program, Crystal?
It is not. Nope. Orleans is not in this one. It was in our last Soft Second. It's not in this one, though.
Okay.
The Ascension is in this one. EBR is in this one. West Baton Rouge is in this one. Tangipahoa, St. Tammany, all of those are in this one.
I think I remember seeing kind of a list of the 51 parishes.
Yeah. Yep. So I can list them if they would like me to list them. It's Acadia, Allen, Ascension, Avoyelles. I'm gonna tear up some of these names, y'all, because I am from Texas. Okay. Beauregard, if I'm saying it right, Bienville, Bossier, Caddo, Calcasieu, Caldwell, Catahoula, Claiborne, DeSoto, East Baton Rouge, East Carroll, East Feliciana, Evangeline, Franklin, Grant, Iberia, Iberville, Jackson, Jefferson Davis, Lafayette, LaSalle, Lincoln, Livingston, Madison, Morehouse. Yep, that's it right there.
So
And
I
then
just pulled that up. We have a question here that says, can you repeat the max income for a single individual in Ascension Parish?
Single individual in Ascension. Okay. Let me go back up. Yep. 41,200.
So,
That would be
Crystal,
40.
I always like when we do these things for you to kind of clarify and go over what things that they can look for in the types of buyers that they're working with. And so you always classify it as working families, first responders. You know, can you give us more of those examples of, you know, the types of buyers that can typically qualify for, you know, this type of program, as well as even your down payment assistance?
Yeah, sure. So all of your essential workers, anybody that's worked in you know, now in this COVID weather, everything that's considered essential. Your receptionist at your the doctor's office, at the dentist's office, the postal people, the Amazon truck driver. I don't know about you guys, but I know mine by name now. Okay. Any persons like that, the school teachers, the front desk clerk at the school, even state workers. I'm a state worker, and some of us can qualify for this product. When I taught school for 10 years, I qualified for this. The teacher's aide, people that work at Walmart, any of the fast food restaurants, any clients that you get like that, the working families, firefighters, police officers, all of those qualify for these products, all of those. And so if you get into one of those buyer's consultations, I would definitely bring this up. Definitely.
Great list. And I think that's helpful from the realtor side to kind of trigger that, you know, when they're working with them or sitting there through the consultation, kind of those steps. And then one of the things that we came up with in the last was kind of like having that process of knowing, okay, let's talk about some of these things, identifying whether or not they can qualify, but in introducing them and recommending that Homebuyer Education resource. And certainly LHC provides that right now as a helpful way to kind of get people in there.
Yes. And then I wanted to tell them as well that first time home buyer, the rule of thumb is have not owned a home in the last 3 years, but it's a couple of exceptions. Let's say a homemaker is displaced. They went through a divorce, and the only time they owned a home was with a former spouse. If that's the case, then and it has not been 3 years, they're considered a first time home buyer. And this homemaker, let's say they don't have any children, they're considered first time home buyers. If they have children, and the same rule of thumb, the spouse wins the home, same thing, they're considered a first time home buyer. So those are some exceptions to that.
Right.
Yep, that's some exceptions to that. So yeah, that's
Any other questions from anyone? Now's the time to ask. Our next program is on mortgage credit, right? Is that correct?
Yes, ma'am. That's the next one. Yep.
Yes. So we will have that coming up next. That's if you want to get to that and register, you can find that resource under the post regarding financial resources for buyers. And you can tune in on what realtors should know about mortgage credit certificates, as well as access all the previous recordings that we've done regarding down payment assistance and homebuyer education. If there's no other questions, I hope everyone has a great day. Thank you, Crystal, and thank you, Ms. Terry, for joining us this morning and presenting us with this information.
Thank you so much for having us, Miss Amy. And yes, if they have any questions, they can always shoot us an email and we'll go from there.
Thank you, everyone.
Thanks, Amy. Have a good day.